Okay.
Good morning, good afternoon, or maybe good evening, wherever you are. So welcome to F50 Global Capital Summit, Day 2, the Silicon Valley Investment Forum. Today is our second day of our 6th annual F50 Summit Conference, hosted virtually from Austin, Texas for the very first time. And of course, for the next few years, for the spring conference. By the way, just in case you ask, our fall conference will remain from Silicon Valley. I would say lots of friends around the world. So it had been a very exciting event for us, particularly change the location for the very first time for the event. Today we have a very interesting panel, a blended Silicon Valley investors and Austin investors, as well as global investors, to talk about the post-pandemic investment. As many of you already know that the pandemic to change the behavior and the business model for many angels and venture capitalists. Of course, not all of them. So there are many people expecting changes and had experienced drastic changes last 1.5 years. However, now the world is slowly getting open. California opened last week, and Texas, I think, opened like 10 days ago. And in most of places, you don't need to wear the mask anymore. So people are very eager to go out to travel, for party, for events, for leisure, and anywhere people just want to see people in person. So it we call the post-pandemic. What are the impact to the venture capital world / startup investment? And that's the topic we would like to discuss today. So today we had invited a group of speakers. First, I want to introduce my co-host, co-moderator today, Pavan Kumar. Pavan, maybe you can do a quick intro for yourself.
Thanks, David. Pretty excited to be part of this panel and also joining you in getting some insights about post-pandemic investor sentiment as well as changes which are happening out there. Very briefly, I'm Pavan Kumar, co-founder of 3PM Ventures. We are a very early stage funding company. We fund companies in India, USA, Middle East, and UK. And we are going to talk to panel about investor environment and what are the changes we have experienced seen during pandemic and what new things have evolved over the period and what do we foresee in the near term. So happy to be a part of this.
Right, next I want to introduce a legendary investor who had experienced many different cycles of Silicon Valley in last 20, 30 years. I forgot count how many years here. Please welcome Bill Reichert.
Oh, wow. Thank you, David. Hi, Pavan. Good to see you. Yes, my name is Bill Reichert, and I am a partner at Pegasus Tech Ventures. Pegasus is a global venture capital firm with $1.5 billion under management. We invest in pretty much all sectors and pretty much all stages from seed to pre-IPO and across geographies. We do most of our investing in the US, but a good chunk of our investments are well outside the US, including East Asia, Southeast Asia, South Asia, Europe, Israel. So we're kind of all over the globe, which is very interesting and actually relevant, very relevant to this topic. So happy to be talking about that.
Great. Next one, I want to introduce a local Silicon Valley investor as well, Amino Capital's partner, Sue. Welcome, Sue.
David, hey everyone, great to actually meet you guys here, and really honored to join this panel. I'm one of the partners at the Amino Capital, which is more like an early stage venture firm based in Palo Alto, and we focus on investment in big data and data-driven companies. And so far, we've been around for 9 years, And so Amino, we have founded over 160 companies in their seed and Series A, Series B, and including about 11 unicorns. You know, we knew David like from day one, and then we kind of like grow together. And so including companies that many of you guys in Silicon Valley probably heard from me on my WeChat post and Twitter. So including like Chime Bank, Webflow, Replaying recently Asian grocery shopping app We, and Headspin Gorilla, which was acquired by Illumina, Misigo, and ICP, which we invested in 2014 and then became one of the top 15 market cap ICO. And Mobike, and which was acquired by Meituan when IPO in Hong Kong, and Yiqixie, which was acquired by Kuaishou, IPO in Hong Kong. So we actually laser focus on investment in local Silicon Valley companies, or companies that actually we knew the founder very well, and especially those ex-Googlers, and they wanted to start a company somewhere else in the world, including China and Europe, Africa, you name it. So yeah, so we were very happy to join the panel and super interested in what happening in Austin, and recently stopped by Houston for a deal, which is very, very impressive. Yeah, thank you.
Great. Next, I actually want to introduce Texas-based venture capitalist, and Stephanie Campbell. Please introduce yourself.
Thank you, David. Hi, everyone. My name is Stephanie Campbell. I'm the general partner of the Artemis Fund. We're a seed stage fund based in Houston, Texas, and we lead deals that have at least one female founder or co-founder. We actually raised most of our fund over the pandemic, so we know what it's like to experience the founder struggle of raising during a pandemic. We've invested in 10 deals, led all of them. We've been followed by some pretty impressive co-investors, and all of them have been raising follow-on despite the pandemic. We focus on fintech and digital e-commerce. I'm really excited to talk about what we're seeing through the pandemic and post-pandemic in terms of investment opportunities.
Thank you, Stephanie. Last, I want to introduce a long-term friend of F50 and also a long-term participant and observer of Silicon Valley. You see all of them from Plug Play, Rocket Space, Salesforce, lots of them, and I'm sure you have lots of to say to the change and the cycles of Silicon Valley, just like Bill Record. And there's one more variable for you is that you grew up from Texas, and I'm in Austin, Texas right now. Please welcome Kenneth.
Thank you, David. Hi, Kenneth Wu, and very excited to be here. So as David mentioned, I've known David for a very, very long time and been involved with FD from the very, very first class, all right, or cohort. Yeah, so I've been a very active angel investor. So actually, I'm a current member of both Sandhill Angels and actually Sierra Angels, spending a little more time in Lake Tahoe these days. So a lot of interesting deals there as well in Nevada. But anyway, so so I really work a lot with and focus on a lot of the B2B companies, SaaS, AI, and various different things. So I'm active on the a number of the incubators from Skydeck and Plug and Play and yeah, MIT venture community as well. There's very active activities there. And related to B2B, I've actually been involved with a number of I was called B2B enterprise companies, even dating all the way back to Oracle when it went to IPO. That's a long time ago. Siebel System when it was IPO, then was acquired, and then more recently been involved with a company called Velocity that was also got acquired by Salesforce. And so I'm actually currently a member of the Salesforce Ohana, and very excited to be here and look forward to the panel. Yeah.
Okay, thank you, Kenneth. So the first question is about the venture capital model. Of course, I can give you a hint. The second question is the Silicon Valley's challenge. So in the last 1.5 years, many people were quite excited, like remote work business model. Somebody invented a new name called remote tech. Because people cannot see each other. But let's focus on venture capital itself. So because you cannot see each other, so remember 20 years ago when I came to Silicon Valley, everybody told me that angel investing is a local business. You have to see each other's eyes before you decide whether you invest for the founder or not. Now you cannot see them except Zoom meetings. So last 1 year, many angel networks started doing remote due diligence and remote investing, and they figure out, oh, if it's remote, I don't need to drive there, and then I can invite globally. I noticed people like East Coast investors were investing in Silicon Valley, and Silicon Valley investors were investing in India, and all sorts of global interactions bypass the distance. That's one of the opportunities or challenges. Second, when we notice that because you cannot see each other, data is more important, then we came a new player called Tiger Global. Tiger Global deployed tens of billions of dollars last half a year, which is completely disrupt the old VC model, long time of due diligence. They just check out your data. You have all the data before you meet with you. Probably have a term sheet before you meet with the founders. It's a completely new business model. So the first question I want to ask all of you is that what is the ending of the pandemic means to venture capitalists? You can address a little bit to the earlier stage investor as well. So maybe I will start with Bill.
Yeah. So, we sort of thought when the pandemic started that sort of the way things would go is that, venture capital is going up and up and up, and then the pandemic hits, and then it would go boom. And then there would be some time when we were down here, and then it would return. That's, that was the first thought that came to mind when the pandemic hit. And that didn't happen. What happened was, the market was going up and the pandemic hit. And then depending upon what sector you were in and what company you were in and where you were, the world went like this. and it just went crazy. And so ultimately, though, what you see is that it just kept going this and up, right? It didn't go down. I mean, there was a little bit of a blip in there, but what happened was that we adjusted extremely fast. And the entrepreneurs, most of them, a lot of them, I don't know, a lot of them adjusted extremely fast. Anybody who could pivoted. There were a bunch of people who couldn't pivot, so they had to figure something else out. And then everybody saw these amazing new challenges that we had in the world because of the pandemic. So we had this explosion of innovation, specifically around the pandemic, from sort of every sector that you could imagine, from sort of boring and obvious sectors like logistics and delivery and that sort of thing, through med tech, health tech, medicines, diagnostics, therapies. Health tech has exploded off the charts, and then sort of everything in between with sort of this remote tech or whatever, sort of filling in the gap across the board. So, I mean, the bottom line, what the pandemic has done is accelerate a whole bunch of things, and enabled us to get comfortable with a new way of doing things in terms of being willing and able to meet and diligence companies remotely. So, let me stop there and let other people have a chance.
Maybe Stephanie, go ahead, Stephanie.
Yeah, I'd love to follow up on that point. I think you're right, Bill. Everything was accelerated, including the fact that venture capitalists now realize that great companies can be built anywhere. They don't have to be just in the valley. That great talent is also was dispersed, and I don't think we're going to put that genie back in the bottle. That entrepreneurs want to be flexible. They want to find talent all over the U.S., even globally, and they're building more dispersed teams. we had invested in about 3 deals before the pandemic hit. We were up to 10, so we've met 7 that we've invested without meeting. I think post-pandemic, what you'll see is most of the diligence can be done virtually. Most of the meetings can be done virtually, but once you're ready, and if you want to win the deal and lead the deal, that you're going to have to make a trip to meet the founder. And we're seeing more of that. We're definitely seeing founders travel and investors travel to win the deal and to lead post-pandemic. So I think we'll see more travel, but in terms of great companies being built anywhere, I think some secondary markets like Texas, Atlanta, DC, Nashville are really going to benefit from a more dispersed founder talent.
Thank you. So,
really inspired by the other investors' comments and totally agree. And then it just made me realize that COVID actually changed us forever. Well, for the last years, like for the last 2 years, we actually invested in more deals than before. And then simply because we have more time to think, and then we just stay home more often, and then we don't have to drive around, travel around. And but why it actually changed us is there are a couple things. One is, yes, there is no problem. We can actually be, source deals online and talk to people like now, and then no problem. We sincerely share what we have been thinking, and then to show who we are, and then we'll actually attract more like-minded founders. But in the meantime, it actually make us work harder. So for example, like if it's early stage and then we are leading the deal, so we will feel more comfortable to invest in people that actually we knew very well before, because we don't have opportunity to meet in person. So if we don't know that person beforehand and we never walk with them, play soccer with them, tennis, and then it actually make us feel more like we have to spend more time together. So we actually have to spend, make more effort. So for example, like after we actually lead the deal, we will actually arrange business development meetings, recruiting meetings, and invest next round financing meetings. And then those meetings, oftentimes we didn't attend before COVID. But because we didn't know these people very well beforehand, so we have been attending all this type of meetings with their partners or engineers and key executives. So I've been attending so much of such kind of meetings, which is like really, it's actually it made me realize that, oh my gosh, those meetings are super interesting. And before I didn't have time to attend, but because of COVID, I didn't know those founders so well, and then I wanted to attend, and I learned so much. So I realized that even though after COVID, I still didn't have to attend, but I wanted to. I really wanted to take advantage of all those, Zoom calls and everything, and then to attend more and more meetings. That's one thing. Another thing is, so during pandemic, we have all this like investor requests for us to actually make introduction of really good engineers and enterprise SaaS salespeople. So those are really valuable new type of talents that we actually rarely had before. So it's very difficult for us to make introduction, and then it's very difficult for people that work at Google or Facebook to jump in a startup company which only have like less than 5 people. So what we have been doing is taking advantage of this global remote working trend. And then we aim to hire 20 engineers and 20 salespeople all around the world in-house to provide value to our new deals. And because that's what we have been promised to our companies. So this actually been very helpful internally for Amino, because internally we used to have this like software to track deals just sitting there, never being, never being altered or any new features. But because we have all this like hired in-house engineers, so it actually can accelerate the evolvement of our own software. So those are the two things that totally changed the firm.
Great, Kenneth?
Sure. I think just on the theme of a lot of what was discussed here, I think what I've seen a lot in the deals is really, my overall theme is kind of really work from anywhere. And you hear that a lot, but what it translates to is the startups are really from a lot of different places that you would not have looked at before because of the physicality of how we work, right? So in particular, for example, in Berkeley and Skydeck, before it was all focused around UC Berkeley and the Berkeley community. Because of the pandemic, it forced Skydeck to open up to the whole world. So it doesn't really matter where you are. And the quality of deal went up and the volume of deal went up. Just like Bill was saying, it starts going like this, right? So all of a sudden it just exploded and the startups actually got more interesting. So it's kind of one of the genies out of the bottle. You're not going to put it back because you're not going to lower the quality of the deal, right? So I think and those companies are working all around the world. So there are times in which I get on a call, you have no idea, are they in Taipei or are they down the street 2 miles from where I live, right? So it became immaterial. I think that really opened up the eyes, I think, and the opportunity to really not only find interesting deals and work with companies, but those companies are now working with people from all around the world. And investors, I think, could be actually also from anywhere. So I think it really kind of opens up that perspective. Be really interesting when we go back to the physical meetings. How would that evolve? But I think this genie is out of the bottle, and I think it would change how the industry thinks about deal flows in companies.
Great.
Right.
I think it's pretty interesting panel, right? Bill, I want to congratulate you for the acquisition of Garage Ventures by Pegasus Fund.
Thank you. Yes.
Compliments for that. Great news and great way forward. And we have a fund based out of Austin, which is women focused, which funds women. And then we have funding, deep tech companies and wide coverage and, Kenny's, with a lot of experience from industry and also his angel investing. I think during pandemic time, I think things dramatically moved. I just want to understand, did the VCs change the business model because they didn't know how to cope with the pandemic, or the opportunities which are emerging during the pandemic? Or did we discover some new geographies, pockets of innovation, which we didn't see before? We suddenly discovered that, wow, there is a lot happening elsewhere, low valuations, good opportunities, large markets like India, Africa, and all. Or are we adapting to a new normal? So okay. I just want a perspective on that.
This question just a little bit. Okay, so probably there's two questions. One is the Silicon Valley's business model impact. Second one is the global part. Let's focus on the local part first, because Silicon Valley right now have two challenges. Number one is the global entrepreneurs like Austin is one of them. Second is money. Because of the pandemic, people realize that all the money could come from Wall Street, from other places as well. So, however, as I mentioned earlier, in Dixon Doerr's keynote speech today, and the Silicon Valley's venture capital percentage increase still significantly more than Austin, Texas, which is many people hope as one of the important containers did not happen from this perspective. So maybe some of you can address from this perspective.
Well, just to jump, in terms of market share and all of that, and sort of touching on Pavan's point, when I, to your earlier point, David, when I came to Silicon Valley a long time ago, I was a graduate student here at Stanford, and I started a company while I was a graduate student. I wound up raising venture capital way back then. And what I, back then, I remember, the statistic was that Silicon Valley had about 40% of all the venture capital in the United States, and that, venture capital was, insanely concentrated in Silicon Valley, even though Boston had been the, sort of the original home of venture capital. Silicon Valley had taken a commanding lead. Fast forward 30x years, and Silicon Valley still has about 40% of the US venture capital world. But remember, I mean, the money that Silicon Valley deploys is, in the olden days, it used to be from all over the US, the Harvard endowment and the Princeton endowment, as well as CalPERS and CalSTRS. Now the money that's deployed out of Silicon Valley is from all over the planet. And it's from all sorts of new investors that have come in, the mutual funds now, the investment banks, the commercial banks, all of the corporates. I mean, the sources of funding have dramatically evolved over the years. But for a whole bunch of reasons, because of the sort of institution of venture capital here in Silicon Valley, the percentage that gets deployed through those funds is still, roughly the same. So, but what we're doing is we're taking those funds and investing it all over the planet now. And so if you look at the diversity of investments geographically, stage, et cetera, I mean, it's become wildly more diverse and more geographically spread out than it was before, even though a lot of it is being funneled through these, Silicon Valley-based institutions. So there's no good reason why. I mean, it's true in every industry. There is a sort of core, institutional group that does sustain for a long period of time, but it doesn't mean that Silicon Valley somehow is competing with Austin in that sense, because so I'll let somebody else grab the ball and run with it.
I guess I'm just like I'm the follow-up for Bill. I think there's a ton of liquidity in the market. I think that and like entrepreneurs moving around and talent being located, great companies can be funded anywhere. Great funds can be funded anywhere. And I think there's been some really great emerging managers come out of COVID. Quite a bit of first-time funds didn't make it. And the ones that did, I think, are definitely positioned to outperform. I think there's definitely a tendency for large LPs and capital to go towards Silicon Valley, but there's still a lot of opportunities, both where founders are moving and where funds are being formed to take advantage of those markets. And, look, Silicon Valley's still, playing in the NFL, but there's really great opportunities. There's going to be some incredible innovation and some incredible emerging managers coming out of secondary markets. And I think there's more capital moving that way as well from LPs.
Okay, I got Stephanie. I got to follow up on the metaphor, though. I'm sorry. If Silicon Valley is the NFL, what is Houston?
Yeah, Houston is a pro league European football.
Oh, okay.
We're a little different. We're still really fast and mean and growing.
Absolutely. Okay.
Well, so actually, I want to bring back that question because Austin seems very clear from a statistics standpoint, has not created any possibility to challenge Silicon Valley in the near future. However, like in this 1 week ago, we have our first day of our conference. About 1/3 of Austin investors actually came from Silicon Valley. So, but still too small. On the other hand, the Tiger Global's challenge, including Vision Fund, these two models are being learned by many different companies, right? Studied, can we do it? They deployed a significant more amount of capital last half a year than historically any VC could deploy in half a year. So that will show up probably in Q2's statistic report. Will that create a challenge for Silicon Valley?
I mean, I'm happy to jump on that. I mean, yes, it changes it changes the flavor, it changes the tone, but it doesn't change the fundamentals. And so, yeah, just the same way that the SoftBank Vision Fund, got a big splash and did absolutely change the news cycle. From day to day, when we're jumping on a company and we're diligencing and we're looking and we're trying to make an investment decision, that stuff, that stuff is peripheral noise. It's not core to what is going on in venture capital. In fact, again, there have been a lot of these changes. So the rise of accelerators, that was probably at least as sort of game changing as the Tiger Global. The explosion of corporate venture capital, that has been, dramatic in terms of the way it's evolved, the venture capital world. And then the influx of capital, the just extraordinary amount of capital that is flown into venture capital. Venture capital is such a tiny asset class that just, this relatively small influx of capital has just exploded valuations. So that's another topic, but and that's, it is related to SoftBank, it is related to Tiger, but it's more related to just the flood of capital in venture capital that has created these, insane valuations that we're seeing.
Yeah.
Great. Maybe so. Kenny, do you have a short answer to the similar question?
I can keep mine real short, which is I totally agree with Bill that the valuation has gone, I don't know, fluffy doesn't even begin to describe it, right? We're beyond stratosphere, and I think it's going to be interesting whether, how would that play out over time, right? And which market is going to. I think there is a correction. It's only a matter of time, right, or adjustment, if you will, right? And I think but it's in the end, it's going to be it's a two-sided marketplace, supply and demand, right? So there's continued to be a huge amount of supply. It changes the game, but I think at some point it's got to correct. Right?
Yeah, I think for the last 40 years, there always been like new markets besides Silicon Valley, and to me, I feel like Silicon Valley's influence actually expanded. So even before COVID, we actually recommend our portfolio company to actually go from like SFO airport and then draw a line and then to find the place that actually closest and also feel more comfortable, because it's all immigrants in Silicon Valley starting companies. So many of them take advantage of their home country. And then, so just to open an office somewhere else outside Silicon Valley is too expensive to expand. So that's one thing. So another thing is like, I think every 18 months, there was this new hype. So before, I think Los Angeles had a chance because the virtual reality industry, and then before it was successful and AI was here, and then the hype went back to Silicon Valley. And before AI was successful and there was blockchain, the largest hype in the whole human history. So then crypto, and then crypto bursted, and there is COVID, which is the remote working and, like all kinds of new economy, digitalization in all kinds of industries. And then suddenly like Austin and Florida became totally a hype because, all those like Goldman Sachs moved to Florida because no income tax, and Facebook, Apple, and moved to Austin. And so it's definitely a hype right now. So as early stage investor, we definitely aware of all this hype. We got used to it. I mean, if there is no hype, there is no supply of good entrepreneur. And then it's all up to us, how do we actually invest? And then investing for us, we always invest in people that we truly respect. Because as I mentioned, when we invest in company, we work for you. So you have to be someone that we truly respect. So like every month, our CEO, they send us monthly newsletter with something like ask, right? So we have to respond. and within 2 hours we have to make introduction, and I work for you for the next 2 hours once I receive your email. So you have to be something that totally innovative. All our ecosystem will embrace your idea and then wanted to talk to you. So those are so important. And another thing is, I think, so in Texas, the reason why we actually have so much interest in Texas is because the company that we met there, valuation is very, very reasonable. And their performance is always really good. Many of them are post revenue, some of them even profitable. So, and then those already have tech giants in there, like company like Indeed, and they only do like recruiting, but they did it so well, and their revenue is totally profitable.
Yes, indeed, it's a very low company. I want to follow up with your comments about the affordability for the valuation. Pavan mentioned that international. Let's continue Pavan's question that valuation is also cheaper in India, but also cheaper everywhere else. So maybe I want to turn back to Pavan. Pavan actually spent time in Austin, in Rochester, and Silicon Valley, of course, in India before. Maybe Pavan, do you have a question I want to ask our speakers?
Yeah. So I think it's pretty interesting, right? A couple of things we just talked about. Obviously the VCs are the trigger and the catalyst for all the innovations. But another interesting thing to see during pandemic is the growth of even the LPs, angel investing. I think it's very good. It is going beyond Silicon Valley, and in addition to the startups, we are also seeing the growth of investor community, the asset class emerging as well. So the question is, how do we really sustain and expand this ecosystem beyond Silicon Valley? Just to take that culture to different places and different geographies, markets, and different segments of industries, so that the innovation becomes the triggering point for the future, and also to the growth of the middle class, as well as the general humanity, right?
Vaughn, I think Silicon Valley culture has expanded around the world. I mean, I think it's everywhere now. I mean, we see it in the one of the things that Pegasus does is this Startup World Cup competition around the world. Last year during COVID, we did 60 regional competitions around the world, and it was phenomenal. And every ecosystem on the planet now is totally plugged in to this whole thesis of entrepreneurship, innovation, growth. Get the universities to be teaching young people how to be entrepreneurs. Stop training lawyers. Stop training bureaucrats. Train entrepreneurs. Right? I mean, that's everywhere on the planet now, and it's it's a great phenomenon. It speaks very, very well for the future.
I have a question related to Pegasus. I know Pegasus run this, but I actually observed the Startup World Cup. This question is also for everybody else. So we know so far there's only one Silicon Valley. Nobody else catch up. So let's see. On Pegasus, on your capital deployment, other than I think Silicon Valley and maybe Japan, other than choose, where else is your number one in your network?
So, by capital, our number 2 region is actually Japan.
So other than Japan, I know Annis has pretty strong hold in Japan. Other than Japan,
right. So our number 3 is Southeast Asia.
Southeast Asia, okay. Cool.
So we have done over 40 investments in Southeast Asia. We are now we're investors in what was called Gojek, which is now called Co2. Gojek had acquired one of our portfolio companies, so now we're shareholders in one of the Southeast Asia unicorns.
Great. I just want to clarify, your Southeast Asia does not include India, right?
That doesn't include India. We've done a few investments in India. Actually, our first non-personal investment during COVID was in India. We invested in a company called Mobile Premier League, a gaming tournament technology company, which again, Pavan, I'm looking for cheap valuations. I ain't finding them anywhere on the planet. Okay, so MPL had an extraordinarily high valuation when we invested, and now it's gone up 5x since we invested. I mean, so yeah, and then we have a few investments in Europe and Israel. We have maybe 10 investments between Europe and Israel.
Okay, cool. Let me ask all of you, this is the same question that, let's say, because of pandemic, now investors working remotely, and now realize money can come from other place. Where else you think can be a big rise in the capital deployment? I know entrepreneurship education is a global phenomenon, but what about capital deployment? Okay, that sounds not a easy
Come
question.
on. Sue, you're global, aren't you?
Yeah, India. So today we actually have a TechCrunch coverage of our recent investment in an Indian fintech company. And for the last couple months, there are like so many Indian companies achieved unicorn status. And the leading one is definitely the one that SoftBank invested, but there are so many of them. I think because there is this really big tech giants. I mean, the carrier company, I forgot the name, big carrier. So they make almost the carrier plan free in India. It's almost like free. So about like $1 something. And that's one thing. And another thing is there is like company like Xiaomi and some other phone company make the cell phone almost free. So the smartphone adoption soared in Indian population. And then also the infrastructure. So we've seen a lot of the, like it used to be a phenomenon in Chinese returnees. And then we've seen so many Indian returnees. So, or people that, went to IIT and then traditionally they might wanted to come to the States. And then, they have MBA and then they did very well in all those tech giants company and became like executive, even the CEO of so many tech giants. But right now we've seen so many IIT grads, they stay in India and start a company. So this is totally interesting, yeah.
I have a follow-up question with this one is that, do you believe, can anybody like challenge Silicon Valley? Of course, 20 years ago, Silicon Valley is about 70% of worldwide venture capitalist. Bill mentioned like right now it's about 50% of North America's venture capital. That's a significant decrease. In the next few years, maybe next 5 years after, we'll be seeing new center because of the pandemic. Now, decentralization of the capital distribution. That's my real question.
There's no question that that venture capital outside of the US is growing rapidly, and we obviously China is a whole story unto itself, but we're seeing in Southeast Asia, I mean, one of the great things for us is there's an explosion of venture capital firms in Southeast Asia. There has been, a dramatic increase in venture capital firms in South Asia, in India. Europe is weird. I mean, Europe is doing okay, not great. It's kind of, they've gotten distracted. But there's no question that venture capital, the allocation of inside the US versus outside the US has dramatically changed over the last 20 years. Your point, David. Within US, however, Silicon Valley still has a fairly constant disproportion, but Silicon Valley works now increasingly across the US. So I mean, yes, venture capital as a class is increasing globally all over the globe. It's not evenly dispersed by any means. It's not evenly dispersed in the United States. I don't think it ever will be. It's just the nature of sort of institutions that they tend to cluster. You see that in banking, you see that in all technologies, life sciences, you'll see it in venture capital. So there's a tendency, there will be clumps around the world of venture capital, but all those clumps are growing. So it's only a good thing.
I think part of it is a source of good entrepreneurs and talent. But I think also part of it is, I think, risk tolerance, right? You have different cultures with different tolerance of risks and failures, right? And I think that does have an impact on how capital is allocated and where it gets deployed, right? So I think in the end, kind of follow the money, and in this case, follow the money that has an asset class that is very risk tolerant.
Yeah. Also the markets, right? The way the markets are growing globally, the way Asia is adding 7 to 8% of middle class every year.
Yeah, China, I totally agree. I think China showed that a new world can be built outside the Silicon Valley, and not just China, India, and very soon all around the world.
Stephanie, you were going to jump in?
Yeah, I mean, I think about risk tolerance, and there's nothing more risky than trying to put a hole in the ground and bring oil out of it. And so we've got tons of risky entrepreneurs here who are looking to diversify away from oil and gas as well. Incredible institutions like Rice University, University of Texas, that puts out a lot of tech talent. There's a ton of opportunity in Texas. I just want to speak quickly to the question that Pavan asked earlier about bringing up the middle class. And one of the things that Sue mentioned earlier about, tons of immigrants build companies in Silicon Valley. I think one of the trends we're seeing is more investment in diverse perspectives from founders, because those diverse perspectives are going to create incredible technology that help bring more people up. So actually 70% of our portfolio is led by a woman of color or an immigrant. And I think you're seeing changes in spending behavior, the way we pay for things. And so I think whether you're in Silicon Valley or across the US, you're seeing a lot more money go into diverse perspectives like women, immigrants, and minority populations, which are going to build solutions that help the middle class. So just wanted to bring that back around. Thank you.
Okay, great. So go ahead, Bill.
No, I was, I mean, and one of the raps on venture capital is that it is this, elitist, white male business. So God dang, I don't know where I'm going with this, but one of the, again, the undertold story, of venture capital, especially in this new world, and what I get to see globally is you see these innovations from all over the planet, including Africa and Latin America, which I have not mentioned much, but where you have developing societies that have to innovate because they can't sell expensive stuff to rich people because there aren't that many rich people to sell expensive stuff to. And so they're innovating around, I think, what Sue's point was, they're developing new business models for the fact that a lot of consumers, they don't have a lot of disposable income, but these players, they want to reach those consumers digitally one way or the other. And so we are seeing, I'm loving seeing all of these innovations from around the world that are developing these new business models that enable things, ironically, like Robinhood, which basically said, hey, to you young people who don't have a lot, who don't want to pay these fees, we can flip the model. We flip the model and we make the fat cats pay for this rather than the consumers paying for this. And that basic idea. Actually, I don't know if Robinhood would admit it or not, but I mean, there's the idea of flipping the model is something that's popped up all over the developing world, and getting the corporates to pay for it rather than the consumers to pay for it, as a way of enabling more people to be part of the innovation ecosystem.
Yeah, I mean, sometimes being a late entrant is a huge advantage. Look at Africa, right? Most of the telco technologies were deployed over 3G plus and later, and they have the huge data innovations happening there. So that's a big advantage. So David, are we going in for the last question?
We're done.
Yes, let's go last question.
Okay. So final thoughts, how to sustain and and how could innovation become global, both in terms of founders, startups, investors. Final thoughts, then we'll wind up.
Okay. Well, just again, I think I've already addressed this in terms of, I think it is becoming global. It's taken longer than we hoped. When we started Garage, when Guy Kawasaki and I got together, we started Garage. We thought that this is 1999. So we thought, oh crap, we're going to miss the bubble. We thought the next big thing was global innovation. And the whole big idea behind Garage was we were going to differentiate ourselves by tapping the entrepreneur community outside of Silicon Valley and bringing them into the Silicon Valley ecosystem. So we were going to expand the Silicon Valley ecosystem globally. That was our big idea. We started opening offices around the world. Here we are 20 some years later, and entrepreneurship absolutely has circled the globe, but venture capital has not. So I have total confidence that innovation and entrepreneurship is indeed still the next big thing. And it's just it will be a matter of time. And I think COVID helps it, this remote approach, before the capital gets, to all of these different corners of the world, because, capital wants return. And so they're going to go to different corners of the world to find return if they believe they can find the return that they're looking for.
I think COVID opened up access to new markets of both entrepreneurs and venture capitalists. And I think there's returns to be found outside of Silicon Valley. And like entrepreneurs do best, I think venture capitalists can do best, which is look at a model that's been successful and innovate on it. And that's what we're doing in Texas. And specifically, the Artemis Fund is doing that for female founders and for immigrants and for people of color. And I think there's going to be a ton of opportunity and outsized returns backing some of those emerging managers. So thanks for having me.
Yeah, I think the I'll call work from anywhere. I think it's the genie is out of the bottle, and I think there's a lot of good lessons learned and new habits that has formed over the year, particularly in terms of if you look at how companies work, and particularly how startup companies work, right? I think it has changed, right, in a material way where we used to be conventional wisdom, we have to sit in the room and brainstorm all day long, right? And iterate. Now we can brainstorm and iterate completely virtually and remotely and reach customer virtually and remotely around the world. I think that it's going to be one of the important trends and game changer. And it's about adapting to that new world and continue to push that world. That's what
Sue?
Yeah, so I think that's a great question. And as I mentioned before, recently there is India, for the last couple months, there is CoinSwitch and urban companies, and it's all those marketplace in India and then coming up, because those are proven successful in China and also in Silicon Valley. And so there is the best talents actually went back to India and started a company. So many growth stage fund are looking for deals in India, because if you have a really good management skill and then you are able to manage a company, not the company might not make money right now, but because the management skill is so good, so you can actually create a company with very large scale and also very high valuation. And then I can see that in the next couple of years, you will see company from India go IPO in the US. Before, Indian culture is more about the really good at outsourcing, and then many companies actually went public in India. But now you will see more companies come to the United States. And also there is also I'll be watching what's happening in China as well. I've seen before in 2016, and you see Tencent, Alibaba being investing all those really good deals in Silicon Valley or in the US. Magic Leap, Snap, you always see Tencent, Alibaba. And for the recent years, there were no Tencent, Alibaba at all. But recently, I've seen Tencent land a deal in Europe. So it's an digital asset management company with valuation over 1 billion. So that's something actually caught my attention because of the Chinese money outflowing to somewhere else outside Silicon Valley. So that's more interesting to me. I mean, recently I've talked to, we invested over 10 deals in India. Most of them cannot accept Chinese money, but there is always country, maybe like in Germany, in Switzerland can still accept Chinese money. So I think those are for different reasons. Every region in the world, there are different reasons for them to actually build their own world. And then I appreciate that. I think it's really good for innovation. And because AI and blockchain are different from social, mobile, local era, and then you have to work with the local talents. You have to have operation intensive type of business model. So that will actually, on the other hand, will actually really nourish the local talents. So I think that's something that I'm watching very closely. Yeah.
Thank you. I think it's great, right? Whatever the culture evolved or developed from Silicon Valley gets expanded globally, addressing a lot of innovation, challenges, social problems, entrepreneurs, and then, a new asset class of investing comes out from, all those who could become angel investors, LPs and all, and this becomes truly global and you see a whole lot of change happening. That's a great thing that would happen in the near term as well as, great for the entire planet, as Bill said.
Okay.
Thanks. It's a great panel.
Great content. That's a conclude for our this event. I want to remind you that on the fall we'll be back to Silicon Valley. Bill, we'll see you there. And again, so share